Well, hello again and welcome. My name is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, August 11th, 2020. We've got several topics that are market related, market moving, real-time information to discuss today. Thanks for watching, and let's get right to the topics of the day. So here we are, all-time highs for the major indices. We've already seen the NASDAQ year to date break out to an all-time high. Obviously big tech, and this is a tech revolution, sort of an acceleration of a trend. So that kind of makes sense as it relates to why the NASDAQ or tech simply is just up year to date, even better than before as we went through this great recession and pandemic. But then we're also now seeing the Dow as well as the S&P 500. S&P is within just a stone's throw away from all-time high that we saw previously earlier this year. In fact, this is the seventh day in a row that the S&P has been up. We haven't seen that since April of 2019. If it goes 8 days in a row, the S&P being up, that's going back to November of 2004. So those streaks are very rare. But ultimately, what is that telling us? One, that the reopening is happening across the United States, and the economy is a little bit more mature to handle the phased reopening, the geographic reopening based upon this coronavirus. Geographically speaking, it's really then indicating that, one, we can reopen smart and thoughtfully. And we've also had the empirical evidence that other countries around the world have done just that, and they're ahead of us, again, in this coronavirus. So don't ever underestimate that. The market looks through, besides the headlines of the day in the United States. You know, there are countries outside of China, take them out of it, in terms of a sample set of data that we can look to, and every country has handled it differently. But the reality and the common theme here is that while a reopening could be slow, it can be done. And that's what the market's pointing to, as well as technology is adding efficiencies across the board to the industrials, to every sector of the economy, if you will. So that's very important. And it also follow the money. We saw about $42 billion flow out of ETFs and mutual funds in the month of June. Now, what that means is markets are continuing to hit highs as those outflows happen. That also is contrarian, right? So investors don't always make the best bets. They may be feeling that they want to get back to where they were when they started the year and take some money off the table. But ultimately, historically, if you see the outflows, the market tends to do the opposite of what we've seen. Now, when I say follow the money, I'm not talking about the fund flows that Wall Street reports on a monthly basis. I'm specifically talking about the CARES Act, the stimulus, our hard-earned dollars that's adding to the national debt, but that is now back in the economy. I reported yesterday that if the states get the CARES Act 2.0 and get an access to the extra $80 billion that they want, that's a leftover from the CARES Act, the first go around, and they get the additional trillion, 2 trillion, 3 trillion, I don't know what trillion it is, but some stimulus, when Congress decides to pass it, will happen. That amount of money in the U.S. economy is staggering. It's never been done before. And as we know, we are a consumption economy. So you give $1 to the natural sort of consumer in the United States, that $1 will almost immediately make it back into the economy, whether it's sneakers or new homes or even anything of the sort in the middle of that. So we're a consumption economy. We're seeing that on a daily basis. So that money is going to work its way back in the economy. Therefore, the markets have been up for a reason. Follow the money. So that's where we keep our eye on this CARES Act 2.0 and Congress actually agreeing to disagree. In a point in time, some point in time in the future, they will agree and they will be spending or allocating a lot of money into the economy. Therefore, equity markets will continue to be supported. Another key factor that we're watching is high yield fixed income or yields have been coming down. That's a positive sign. So if we look at the economic dashboard as it relates to how we manage money for our clients, we want to look at some things like the 10-year treasury or let's say high yield, which is a component to risk. There's also the VIX and a few other things that we have on our dashboard, but all of them seem to be tempered at the moment. And specifically in the high yield junk market, yields have coming down. When yields come down, that's a signal that for the short term right now, there's confidence in that market. there's interest in that market, and there's not sort of that stress that's building up in the market. Once yields reverse in high yield, meaning high yield yields go higher, that means that there's a concern ahead. But as of right now, that's another economic indication that's real time and relevant, showing that the stress is not in the economy. Again, why is that? Because the U.S. Treasury has come to the rescue as it relates to short-term cash management and all long-term liquidity needs for corporate America, as well as for the fixed income market as we've seen them play out. So that's where we are in that. That's important to watch. So a couple final topics. Russia has won. They officially announced that, Vladimir Putin said that he has a vaccine, and Russia has a vaccine to cure all the coronavirus, and therefore they didn't provide the United States, or the rest of the world for that matter, any data to back it up or empirical evidence. But what he did say is he did vaccinate one of his daughters with this vaccine. Now, I'm a father of 3 daughters, and I couldn't imagine what that conversation is going to be at home. Which child that you choose to have an exploratory vaccine with zero indication of what the long-term effects are? I'm sort of poking fun at this story because that's really what the market's going to pay attention to here in the United States. Obviously, Russia can report what they want. China can report what they want. That's neither here nor there. But the real reality is that once you get the vaccine in the United States, or maybe several different manufacturers and biotech companies actually have vaccines, who's going to line up? And then who's going to take it first? And who's going to volunteer to take it first? This is not going to go away. This is sort of the growing debate within America where, as a father, do I want my kids vaccinated? And I'm sure the state of California is going to mandate everyone to vaccinate everyone. So they're going to take their authoritative approach to everyone has to get vaccinated if you want to have your kids go back to school. This is going to be the next chapter or phase of this continuing debate, and unfortunately it's not going to get any easier. It's going to be more difficult, and as these debates continue, we're going to see markets pay attention to it, not in the short term right now, but in the long term. You wait and see. This continued conversation on vaccines will work its way back into the narrative, and ultimately concern for investment portfolios, because that's really just slowing down the economic reopening. And that's one of those conversation points where I don't know how you choose. I think Vladimir Putin said that he's going to give it to the healthcare workers and the teachers who are on the front line. So they're the first up. Maybe we do that here. I don't know. This is not an easy decision by policymakers here once we're on the other side of this, when we have a vaccine. So unfortunately, this is something that we want to pay attention to. As I pointed out earlier this summer, early on, one of my very first video updates, I said that schools reopening will be political. And I got a lot of viewer feedback. A lot of people are like, oh, that's not going to happen, and how can you make it political, Rob? And I said, listen, I'm just reporting what the markets and what I'm reading in my research that's real time and relevant, that what markets are paying attention to. So it has nothing to do with being political. That has to do with what markets are paying attention to. So now I'm telling you this, my research is pointing to the next phase of political sort of father, if you will, of what markets are concerned about. So we have to be concerned with it at Blanke, Schein Wealth Management. Our last topic of the day, will we have an elected president of the United States November 3rd? And I don't think we will. There's a high probability. Why? That we will have one maybe by Thanksgiving. That's my prediction right now. I could be wrong. It's 100% my opinion. Actually, not really. That's what's also working its way into our morning research. There's a lot of factors that are sort of piling up to support this sort of theory, and it's not a conspiracy theory. It's like a real theory that markets could be concerned about this. And why wouldn't that be the case? Because we are in 2020. I think we're all looking for 2021 and everything else that 2020 has to offer sort of be behind us. But let's pay attention to this. You heard it here first. The markets are concerned. I'm concerned that we may not have a president elected officially by Thanksgiving. Who knows? We'll see, but stay tuned. But anyway, thanks for watching. We thank you for sharing, liking, and subscribing. Our YouTube channel is getting some substantial traction, so we know that you guys are watching, you guys are sharing as well. So we appreciate that. And again, until next time, we'll see you soon. Thanks for watching.